Friends, welcome to Yadnya Investment Academy. Through our fund analysis series, we have reviewed some of the most popular small cap funds, and in this video, we are going to compare all of them. Before we start, let me remind you that small cap funds are the most risky funds when it comes to equity investments, but at the same time, they also have most returns potential too. But for them to show their true potential, you should go for these funds only when your investment horizon is more than 10 years away. In this video, we are going to compare DSP BlackRock Microcap Fund, Reliance Small Cap Fund, Franklin India Smaller Companies Fund, and HDFC Small Cap Fund. DSP and Reliance funds follow S&P BSE Small Cap as their benchmark index. Franklin India Smaller Companies Fund has Nifty Free Float Mid Cap 100 as its benchmark index. HDFC Small Cap Fund has Nifty Small Cap 100 as its benchmark index. As you know, we usually pick up an index to compare with the mutual funds, and in this case, we've picked up S&P BSE Small Cap, as this index has more proportion of small cap stocks, while Nifty Free Float Mid Cap 100 has more proportion of mid cap stocks, and Nifty Small Cap 100 is a blend of mid and small cap stocks. So S&P BSE Small Cap is the one that seems more relevant. Now the universe of small cap stocks is very big. Let us take help of this pyramid that you see in front of you to understand this. The first 100 companies of the stock market form the large cap category. Then 100 to 200 form the mid cap category, and 200 onwards forms the small and micro cap category. And so you see, to formulate an index which completely reflects the activity of small cap category is very difficult, and that is also the reason why fund managers of small cap category would have a huge variety to pick stocks from. And that is why benchmarking your fund against an index would be irrelevant in case of small cap funds, as you wouldn't be in a position to predict anything about your fund based upon the benchmark index. This thing is again evident from beta and R squared values here. Now, a value of beta tells you what is the correlation of your fund with that of the benchmark index. Based upon the value of beta, you would be able to tell whether your fund would rise more or less or would fall more or less in comparison with the index. But for that, you would have to look at the R squared value, which tells you how reliable is this beta. Now, an R squared value greater than 0.8 is what is desirable. And if you look at the R squared values of all these funds, the values are way below 0.8, indicating that the beta is not reliable. And so benchmarking a fund against an index in case of small cap funds is not very relevant. So let's move on with the fund comparison. If you look at the standard deviation values of all these funds, Reliance Small Cap Fund has a standard deviation greater than that of the benchmark index, indicating that it is more volatile. Now, as we have seen, beta and R squared are not reliable here. Alpha is the returns generated by a fund over and above the ones predicted by its beta value. So even alpha wouldn't be much helpful here. Moving on to the Sharpe ratio. Sharpe ratio tells you the risk-return correlationship of a fund. So a value greater than 1 is what is desirable, indicating that the fund is able to pull out more returns from the amount of risk it is taking. DSP BlackRock and Franklin funds have a good Sharpe ratio. Reliance Small Cap Fund also has a Sharpe ratio greater than 1, while HDFC Small Cap Fund has a Sharpe ratio below 1, indicating that it is not able to pull out the kind of returns expected from the amount of risk it is taking. Moving on to the PE ratio. If the PE ratio of a fund is below than that of the benchmark index, it indicates growth potential of that particular fund. But as we have seen, the universe of small caps is too huge, and so the PE value of a benchmark index wouldn't help much here. Moving on to the turnover. A turnover value indicates the amount of portfolio replaced by the fund in the last 1 year. So DSP, Franklin and HDFC funds have a lower turnover, indicating buy and hold kind of a strategy followed by these funds. Reliance Small Cap Fund has a slightly higher turnover, but you should be bothered about this figure only if a higher churning of the portfolio is not able to pull out the kind of returns expected. Expense ratio is the amount of fee charged by the mutual fund for managing your money. So lower expense ratio means higher returns for you. Small cap category charges an expense ratio of 2.4% on an average. So DSP, Franklin and HDFC funds charge an average expense ratio, and in that comparison, Reliance Small Cap Fund charges a lower expense ratio. Within a category, you should select a fund that suits your own risk profile. You should consider expense ratio as a parameter for selection only in the case when you're considering two funds for investment that are same on all parameters but differ in expense ratio. So you should select a fund that has lower expense ratio in that scenario. Larger assets under management indicate greater amount of trust the investors have in the fund. DSP BlackRock, Franklin and HDFC funds have been into existence for around 10 years now. In that comparison, Reliance Small Cap Fund is a late entrant which has been into existence since September 2010. DSP BlackRock and Franklin India Fund have been able to gather around 6,000 crores worth of assets under management, and Reliance Small Cap Fund has been able to gather around 4,000 crores worth of assets under management, even when these funds belong to a very young category of small cap funds. Let's move on to the trailing returns. Trailing returns are calculated by moving backwards from the day when the latest NAV is available. The data that you see in front of you is as of 1st of August 2017. That is as per the NAV of 31st of July 2017. DSP BlackRock, Franklin and HDFC funds lag behind the benchmark in 1-year trailing returns. But since these are trailing returns, the scenario could change the next day. But all the funds beat their benchmark in 3, 5, 7 and 10-year trailing returns. DSP BlackRock fund beats the benchmark by more than 10% in 3, 5, 7 and 10-year trailing returns. Franklin India Smaller Companies Fund beats the benchmark by more than 10% in 5 and 7-year trailing returns and by more than 6% in 3 and 10-year trailing returns. Reliance Small Cap Fund has been into existence for around 7 years, and that's why only 1, 3 and 5-year trailing returns of the fund are available. The fund beats the benchmark by more than 7% in 1-year trailing returns and by more than 10% in 3 and 5-year trailing returns. HDFC Small Cap Fund beats the benchmark by more than 3% in 5-year trailing returns and by more than 4% in 3 and 7-year trailing returns. As you know, recent good performance of a fund lifts its 3, 5, 7 and 10-year trailing returns. So it is very important to look at the calendar returns of all the funds. So let's move on and look at the calendar returns of all these 4 funds. DSP BlackRock Microcap Fund has been one of the most consistent funds and has beaten the benchmark by around 10% in almost all the calendar years, except 2009. It was a year when the markets rallied, but when the markets moved down in the years 2008, 11, 13 and 15, it was able to control its losses way better than that of the benchmark. Reliance Small Cap Fund, on the other hand, has not seen the major fall of 2008, but whatever time it has been into existence, it has been able to beat the benchmark. In the years 2013 and 14, it was able to beat the benchmark by more than 20%. In the years 2012 and 2015, it was able to beat the benchmark by more than 8%, and in the year 2011, it was able to control its losses way better than that of the benchmark, and the difference was more than 17%. Franklin India Smaller Companies Fund was not able to beat the benchmark S&P BSE Small Cap in the year 2009. In the years 2007, 8 and 10, it was not able to beat its individual benchmark, which is Nifty Free Float Midcap 100. But we presume it's more of a midcap index. So even if we avoid 2007 and 2008, its performance was average in the year 2010. But since the entry of the new fund manager in 2011, the fund was able to beat the benchmark in the years 2011, 12, 13 and 14 by more than 15%. In the year 2016, it was able to beat the benchmark by more than 8%, and it was able to beat the benchmark in the year 2015 by around 3%. If you look at the calendar returns of HDFC Small Cap Fund, you would find that the fund was not able to beat the benchmark in the years when the markets rallied. That is in the years 2009, 2012 and 2014. It was able to control its losses better than that of the benchmark in the years 2011 and 13, and the returns in the year 2015 were almost same as that of the benchmark index S&P BSE Small Cap. So seems more like a conservative fund. Now what you see in the holding section tells you the kind of portfolio all of these funds hold. For example, DSP BlackRock Microcap Fund holds around 40% of its allocation to mid caps, around 59% to small caps, and just a bit to very small companies. But again, the portfolio figures are temporary and could change the next day. DSP BlackRock Microcap Fund has the second highest allocation to small caps among these four funds. But the fund has a Sharpe ratio of 1.47, which indicates that the fund is able to pull out more returns from the kind of risk it is taking. It has a lower turnover, which is 15%, which indicates buy and hold kind of a strategy of the fund. And the fund believes in its own stock picks. So DSP BlackRock Microcap Fund is a low-risk, high-performance fund. Reliance Small Cap Fund has not seen the market fall of 2008, but in the other years, when the market was down, it was able to control its losses. Reliance Small Cap Fund has a higher allocation to small cap stocks, which indicates higher risk. The fund has a Sharpe ratio of 1.04, indicating that it is not able to pull out the kind of returns expected from the higher risk it is taking. The higher churning of the portfolio is again evident from the turnover, which is more than 50%. Reliance Small Cap Fund also has a higher standard deviation, indicating that this is a high risk fund. Franklin India Smaller Companies Fund has a good amount of allocations to mid cap and some to large caps as well. This might be to mitigate the portfolio risk. The fund has a good Sharpe ratio of 1.29, indicating that the fund is able to pull out good amount of returns from the amount of risk taken. So in all, Franklin India Smaller Companies Fund is a stable fund with good growth. HDFC Small Cap Fund has a higher allocations to mid cap, again indicating the conservative strategy adopted by the fund, which we've already seen from its returns pattern. So HDFC Small Cap Fund is a fund for the conservative investor. Let us talk about the fund managers now. Vineet Sambre of DSP BlackRock Microcap Fund is a BCom and an FCA. Vineet has joined the fund in June 2010 and has worked extensively in the investment field since 1998. He also handles two other DSP funds, one of which is DSP BlackRock Small and Mid Cap Fund, which is also a very good performing fund. Jay Kothari, who is also the fund manager of the fund, is a BMS and an MBA from Mumbai University. He has joined the fund in March 2013, and since 2013, he is also handling 9 other small DSP funds. He was VP Equity Investment Division in DSP BlackRock Investment Managers. Due to the great performance delivered by these fund managers, the fund saw huge inflows, which prompted the fund to stop temporarily accepting any new investments. Reliance Small Cap Fund is handled by Sunil Singhania and Sameer Raj. Sunil Singhania is a BCom, CA and a CFA and has been leading the fund since September 2010. He has been a part of Reliance Equity team since 2003. He is CIO of Equity in Reliance Mutual Fund and is a mid and small cap expert. He manages Reliance Growth Fund, which has around 6,300 crores in assets under management, and also manages Small and Mid Cap Fund, which has around 3,000 crores worth of assets under management. Both these funds have consistently beaten the benchmark but have been category averages. Sameer Raj has joined the fund in 2017 and has been a part of the fund house since 2010. Franklin India Smaller Companies Fund is handled by R. Janki Raman, Hari Sham Sundar and Shrikesh Nair. R. Janki Raman has been a part of the team since 2008 and has been leading the fund since February 2011. He is a BE and an MBA from IIM Bangalore. He also manages Franklin India Prima Fund and Prima Plus Fund. Prima Fund is a mid-cap fund and has around 5,500 crores worth of assets under management, while Prima Plus Fund is a multi-cap fund and has around 11,000 crores worth of assets under management. Both these funds are top-performing funds in the long term. R. Janki Raman is assisted by Hari Sham Sundar since 2016. Hari has been a part of the fund house since 2009. HDFC Small Cap Fund is handled by Chirag Settleward and Rakesh Vyas. Chirag is a BSc and an MBA and has joined the fund house in 2007 and has been leading the fund since June 2014. He also manages HDFC Midcap Opportunities Fund, Balanced Fund, Children's Gift Fund and Long-Term Advantage Fund. The Opportunities Fund is being managed by him since 2007 and is top performing in 10-year trailing returns and has around 17,000 crores worth of assets under management. Balanced Fund is an equity-oriented fund and has around 10,000 crores worth of assets under management and is best in 10-year trailing returns in the category. Children's Gift Fund is again an equity-oriented hybrid fund, and the Advantage Fund is an ELSS fund. Both these funds are also good performing funds and have around 1000 crores worth of assets under management. So as far as the fund managers are concerned, all these 4 funds are blessed to have star fund managers. Let us look at the returns of a 5-year SIP in each of these funds where the investment amount was 10,000 rupees each month. So, for a total investment of 6 lakh rupees, the value of investment in DSP BlackRock Microcap Fund was 13.85 lakh rupees with a CAGR of 35.31%. In Reliance Small Cap Fund, the value of investment was 13.49 lakh rupees with a CAGR of 34.13%. The value of investment in Franklin India Smaller Companies Fund is 12.27 lakh rupees with a CAGR of 30%. In case of HDFC Small Cap Fund, the value of investment is 10.52 lakh rupees with a CAGR of 23.37%. So friends, this is all from this video. Just a small announcement that Yadnya Investment Academy has come up with its first book, which is 108 question and answers on mutual funds and SIP, and this book is available on Amazon. The link to the book is mentioned in the description of this video. So friends, keep watching our channel for more such interesting topics. See you in another video. Until then, happy investing.